Hello traders, Gary Wagner here. Just about 10:40 in Honolulu, 3:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is March the 11th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to look at the breadth and scope of market activity this week. And oh boy, what a roller coaster ride we saw this week. Gold all over the board. We did pull profits on a trade. We'll talk about that on today's report. But first, let's just take a look at current pricing. What goes up must come down. At least that's what they say. And in the case of gold, that's what we're seeing today. Trading off about $20 on the day at $12.52, $12.53. It's traded to a low of $51.64. So as you can see, we're just a couple dollars off the low. Look at that high, $12.84.53. A tremendous move to the downside following yesterday's dramatic move to the upside. Of course, we pulled profits this week when we raised our stop to just below 55. We got out at 54, roughly in this area, and pulled a nice profit. We'll go over that in a little bit. Now, in other markets that we are looking at, there's no doubt we've got some interesting activity. Crude oil, for example, continues its dramatic rise, trading up about 1.75%, 38.50. We've capped or put a ceiling where we believe crude could go to about $40. We'll see if it can reach that. And then, of course, we do have an open trade. That open trade is in the S&P. Now, we still have about 20 minutes to go before settlement, so we'll take a look at that towards the end of the show. But currently, we're well above 17,000 in the Dow Jones Industrial Average at 17,195. You know, interestingly enough, we're now trading at around $12.52. And I can tell you this, we pulled profits earlier this week when we tightened our stop up to $12.54, just under $12.55. Of course, we got into this trade at around $12.17. So it was a pretty profitable trade. We got in roughly in this area here. We actually put this trade on February 23rd. We bought at $12.17. And as I said, we got out earlier this week on the 9th of March with a $37 profit on the trade. And that amounts to roughly $3,700 per 100 ounce COMEX contract. But the beautiful thing about our track table is it allows you to view each and every trade and therefore see the transparency behind what we do. But we are definitely off to the races, off to a great start. $10,000 invested in a single contract of gold following all of these trades throughout the first of the year till now would have bought you a profit of about $19,700, and that is a pretty decent profit for the first part of the year. So traders, we are now flat with no active positions. And if you recall from yesterday's show, I talked about the fact that I really wanted to see the dust settle before we entered another trade in the market. Now, the real question that we need to ask ourselves is, have we seen a short-term top in this market? Will we see this market begin to backtrack off, or could we have a little bit more upside? And to view that forecast, what we really want to do is take a look at our current Elliott wave count. Wave 1, we had a beautiful 38% retracement. On 2, wave 3, this was a 261% extension. Now, wave 4, initially we thought might conclude very quickly when it hit this 38% retracement level, but we did go into a consolidation wave 4. Once we broke out of that wave 4, we could then give a model as to where we thought the top might be. Now, wave 1 and wave 5 are typically about equal. Now, if we simply do that and extend this scalable line, which is the same distance as the rally of wave 1, it takes us up to roughly 1292. And as you know, that's been my target for this particular conclusion, or the conclusion of our wave 5, to as high as about 1305, and that's based on a previous top. We'll have to look at our next chart to bring that into alignment. As you can see, I've gone ahead and pulled up a weekly chart, standard candlestick format, and it does have our major Elliott wave count, which is assuming that the top reached when the market went to 1920 was the conclusion of a major fifth. This long, protracted, extended move to these recent lows at about 1051 concluded a long A wave, and now we're entering a long major B. Of course, that would be a multi-year move. However, when we take a look at the most recent activity and the most recent highs, and that's where I got the upper end of our forecast. In other words, 1291, that was basically a 1-to-1 ratio between wave 1 and wave 5. However, if you take a look at this most recent top here, that comes in roughly at about 1305, 1308 in that area. And you can see that while we have not touched upon that, we have absolutely come fairly close. So there is the real ability or opportunity to see this market track a little bit higher. Well, now it's trading down at around 51. This chart really hasn't updated, but it's trading down at around 51. So even a move back to 1290 to 1300 would be a $40 move and then begin some sort of correction. Or in fact, we might have seen the top right in here as this market came down towards the end of this week. We'll have to, as I said yesterday, let everything kind of settle, see how this market opens on Monday. Of course, we have the FOMC meeting coming out next week, and so that could certainly send some more fireworks back into the thick of things. But once again, I think we had a great trade in at 1217, out at 1254, a $3,700 profit, which is roughly a 30% gain on that trade. Now, I do want to cover our other current trade, and this trade is open. We're long a Standard & Poor's vis-a-vis the E-mini. We've had a tremendous recovery in both the crude oil market and U.S. equities markets together, really surging over the last couple of trading days. When we take a look at our weekly chart, what we're seeing is that for the last 4 weeks, we have really seen this market move dramatically higher off of these lows here at about 16,000 to now track well above 17,000. Now, in terms of our current trade, we are long the Standard & Poor's at 1979. The market closed at 2020 on the day. Our stops are currently below 1265. We will go to look to move them up roughly Monday morning, and we're going to want to see how it opens, but we're going to want to keep it under this 2,000 mark, because my sense is, as you're well aware of, that we were looking at our current resistance level at this particular point of 2003. And this is the most exciting piece of news that we got today, that 200-day moving average. We have excelled above that, and we've excelled above that really for the first time since 2016 began. Because if you take a look at this marketplace here, roughly at the end of 2015, we broke below the 50, we broke below the 200, we went into a defined correction, very, very similar to the August meltdown, except that we made some lower lows. Now, we can see where these lower lows match up when we pull up a weekly chart. But the fact that we closed solidly above a 200-day moving average, solidly above 2,000, which is where I was pegging our former resistance, I now believe that we should see this particular area become a supportive area for the price point. We also know we have some really strong resistance up at these most recent highs at either 2,100 or the record highs, which come in above 2,140, 2,150 in that area. So traders, in terms of my recommendations, I recommend that you maintain your long Standard & Poor's 500 position. We will look to trail those stops up. So traders, this has been a most interesting month. March has not let us down by any stretch of the imagination. One of the fueling factors of the equities markets, to some degree gold, but really the equities markets has been crude oil. But one of the most interesting things is this very, very pure W that we got in oil. So if you look at that, and that of course is from the beginning of this year, and contrast that to the W that we saw in the Standard & Poor's. In fact, let's go ahead and pull that up. And as I said, from the beginning of the year, we got that W really in the crude oil market. And when we look at our Standard & Poor's, let me go ahead and get my pointer up, we can certainly make a case for for a W in the Standard & Poor's also. So traders, absolutely no doubt. I'm very pleased with the overall activity we have seen in the markets this week, as well as our trades. Of course, we got out of our gold trade, 1254. Market looks like it's going to close at around 1250. So roughly in the same area, but a little bit lower. I wasn't too sure if we got out too soon. But once again, as Herbert Hoyle has said, one of the most successful traders of the 1950s, when asked why he has great success when many of his peers tend to not trade as effectively, he simply looked at the interviewer and he said, that's quite simple. It's because I always sell too soon. This has been Gary Wagner, wishing you as always good trading. We certainly got that this week. We'll talk to you on Monday for another daily update and review. Bye-bye.